Hello and welcome to Business Insider with Mario Toneguzzi on YYC Business. Joining me today is Damien Mills, who is Executive Vice President, Tenant Representation for Downtown for JLL in Calgary. Thanks for joining us today, Damien.
Thanks, Mario. Nice to see you.
Well, you folks put out your Q1 downtown office market report recently. It shows that the vacancy rate downtown is 26.8%, which is up 1.1% from the previous quarter. Tell me what you're seeing in the market in terms of vacancy and why it's consistently remains at that elevated level.
Well, obviously, we're in a fairly unstable environment right now. You know, the choice of people to come back to work, the availability of coming back to work has delayed sort of any real demand in the marketplace. We're also starting to see some companies deploy permanent work from home strategies for a proportion of their workforce. So we're seeing some surplus space come into the market. And I think that trend will likely continue for the balance of this year because it's still uncertain as when we'll see a solid return to work in the downtown core.
Okay, the net absorption, which is the change in occupied space, continues to decline, a negative almost 500,000 square feet there in the quarter. Do you foresee more space continuing to come onto the market in the next little while?
I think we're going through a season of change in Calgary. And, you know, Mario, you've been around a long time. I've been around a long time. You know, we see as markets bounce, one of the big heralded activities is mergers. And, you know, when you see a Synovus buying a Husky, or, you know, what Strathcona has been doing, and you see companies acquiring, you know, a lot of people see, oh, there's vacancy as a result, but you're now seeing a season of change. You're seeing a new platform for growth. So although many people focus on net absorption and negative absorption as being the telling tale, is what's driving it. You know, a year ago, negative absorption was uncertainty, the price of oil, the COVID uncertainty. Yeah. Now we're seeing negative absorption be renewed activity in the sector, regardless of what sectors that is. Obviously, the oil and gas sector being dominant in Calgary, that's what you're seeing. So rather than a negative, I see it as we're setting new foundation stones for growth. And we're in a pretty positive market. You know, when we think about high vacancy, low rental rates, you think about the unstable ground we've been in since 2014, 2015 in Calgary. The people that will drive growth, those big corporates, are finally starting to feel the bottom. They're starting to see activity. Some of them are very opportunistic and starting to acquire assets. And we're starting to see demand. And the demand is certainly changing. So from the real estate perspective, we may not ever be the same market, but we're starting to see green shoots. And I think that's a positive. So rather than seeing negative absorption in 2021 as sort of really bad, I'm looking at, no, we're resetting the foundation stone. And we've got a market now that's actually conducive to growth. You know, that the drivers, the tenants who drive the fundamental growth in our market can be opportunistic right now. They can lease at favorable rates, they can reduce their G&A, and they can put their money where they need it, which is in the growth of their operations. So I do see we're at a turning point, and I see that I do expect that threshold to accelerate.
Damien, I'm going to return to that green shoots, but I just wanted to backtrack a second on Husky and Synovus. In your report, it says that more than 1 million square feet could be returned to the market as a result of that merger. Is that what you guys expect?
Well, there's no surprises there. Western Canadian Place, Husky has 1 million feet, and Synovus is that is surplus to Synovus. Synovus can consolidate what they require out of the Husky into Brookfield Place, their new building. So the expectation is that Western Canadian Place will be fully surplus to Synovus. But there's a long-term lease commitment there, so it's going to be a large sublease for, you know, well into 2030.
Okay, super. Green shoots, where are you seeing them?
We're seeing growth certainly in the central core. You know, we tend to whitewash the market. It's not all one market. You know, we see stats 26, 8.8% or 30%. But let's be clear, that's the overall market. There is a big bias to the West Core having the greater vacancy. So west of Fifth Street, there's 40+% vacancy. The central core, the preeminent buildings, those buildings that have invested into their buildings are seeing life. We're seeing deal volume return. And are we seeing big bounce in rental rates? No, but we're seeing deal volume return. And there's quite a reasonable amount of activity in that central core. When we look at the sort of preeminent skyline of the market, which is sort of the index of movers and shakers, whether that's Bankers Hall or the Bow, these are the big buildings that really drive the activity in the market. Their vacancies are 20%. And 50% of that is sublease space. Well, sublease space is near term now. Like we're not seeing, other than the Husky's potential, the rollover years of 2023, 24, 25 are coming. So the subleases are going to be less impactful on the market as the landlords start to realize that 20% vacancy, the landlord's starting to retake control of the leasing activity instead of sublease landlords. We expect to see improvement. And I think we'll see improvement as people take advantage of the softer rental rates and building new foundations for them to continue their growth. I think we're going to see a lot of people invest into space as they reimagine based on what we've learned in COVID and work from home strategy. You're going to see people reimagine how they're going to work. And I think the importance of office space is still vital, but it's going to be less about the individual workspace and more about the collective workspace. And as a result, we'll see change. And those buildings that have set themselves up for that environment, like when you think about the investments that the Ampersand has made, Bow Valley Square has made, 244th, they've made big investments into the infrastructure and amenities. Those amenities have been poorly used over the last year because they've been shut, but they're much more about a collaborative environment and an ecosystem within a building that's responsive to people wanting to come together. And so that central core is going to be really reactive to that. And I expect to see additional improvements in the central core. I do think it's going to be difficult for the West core. And I do think some of the activities that the city is taking and the province makes sense when you look at, are these spaces becoming obsolete? Can they really compete in this new economy, in this new ecosystem that is evolving around workspace? And the answer is likely no. And we're going to have to see some repurposing. But the interesting thing about repurposing is if you start to pull buildings out of inventory, you change the denominator. Our current denominator is 44 million square feet. If we start pulling out 1 million feet at a time, you're going to see rapid change and improvements in our overall vacancy because we make these buildings obsolete or we repurpose them into something else. So, I think we are in a very serious season of change here. Some of it precipitated by COVID and working environments changing, but I do think Calgary is coming to grasp with, our municipal ecosystem has changed too, and there needs to be change, and it needs to be fundamental, it needs to be dynamic, and it can't just be reactive to tenant demand. It's got to start getting out ahead of tenant demand and be understanding what are the targets that tenants are shooting for is where we have to start steering our buildings. And, I think about this arms race of amenities, and do our amenities basketball courts and coffee shops and tenant lounges? But I'll throw another one out here. Do we need prayer rooms? Do we need unisex bathrooms? These are the things that tenants are dealing with. And so when we think about amenity-rich environments, maybe that has to change as well. Who would have thought that, if you look at any company's corporate social responsibility report right now, they're all talking about diversity and inclusion.
Yeah.
Well, prayer rooms are a real issue. There are people that need to pray. And does that need to be an internalized a tenant, or this should be an amenity for a building? So I expect to see the amenity-rich environment also start to be more responsive to the tenant needs as they drive for D&I, as they drive for work from home strategies, as they drive for things. Another example, and we've seen some amazing steps taken by landlords, is, we're a spoken hub city that we're all pushing transit as being a solution. But what happens when transit's not safe? What happens when COVID, people don't want to be in transit? How can we as landlords react? Well, we've seen some really positive gains by landlords. Imagine if your company is paying for a parking stall, but now you've got a work from home strategy. Well, what if I have 2 parking passes? Because 2 people are using that same parking stall. It takes a reimagination from a landlord standpoint, but it's working. And landlords are taking these steps. So as the environment is hostile to transit, how can we as buildings be responsive? and support our tenant compliant base in these buildings. So we've seen some really interesting gains through the difficult times of isolation with COVID.
Okay, super. Well, thanks a lot, Damien, for joining us today.
Thank you. It's a pleasure to talk to you, Mario.
All right, super. That was Damien Mills, who is Executive Vice President, Tenant Representation for Downtown for JLL in Calgary. This has been Business Insider with Mario Toneguzzi on YYC Business. Thanks for joining us today.